This is the morning brief from the Economic Times.
Here comes the sun, doo-doo-doo. Here comes the sun, I say, sun, 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 here it comes. Sun, 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 here it comes.
Here Comes the Sun by the Beatles should have been the background music when Reliance Industries chairman Mukesh Ambani announced last week rupees 75,000 crore of investments in the clean energy business. What is it about solar energy, hydrogen manufacturing units, and fuel cell business that is attracting a business house like RIL, whose cradle has always been oil and other fossil-based fuels? I'm Devina Sengupta and you're listening to The Morning Brief. To understand this pivotal shift in RIL's strategy, I caught up with Tim Buckley. Tim is the Director of Energy Finance Studies, Australia and South Asia, at the Institute of Energy Economics and Financial Analysis. Tim is based in Sydney and didn't mind me disrupting his schedule across time zones. In our call, we were joined in by Arijit Barman, who deciphers for the Economic Times the strategic shifts that business houses make and why they do so. Good morning, Tim and Arijit, and thank you for being with us on the Morning Brief.
Good afternoon from Sydney. Great to be with you.
Good afternoon, Tim, and thank you so much for joining us from Sydney. We really wanted you in the podcast because you have had a lot of experience in understanding how business groups and companies move towards the clean energy. So it's great to have you over. And Tim, I'll start with you. Reliance, with its clean energy announcements, has joined this projection, saying that 75,000 crore will get pumped into clean energy next. Now, this also comes at a time when analysts like Goldman Sachs project that spending on renewable energy will overtake that of oil and gas drilling for the first time in 2021. What is your take on it? And do you really see this reduction of carbon footprint really a good business?
It's an absolutely fascinating time in 2021 to be studying the energy market. The global shift in technology, in economics, in finance, and in policy is nothing short of staggering. And certainly last week's announcements from Reliance Industries as well as NTPC certainly highlight that India is going to be on the centre stage globally in terms of playing its fair share of the work to solve this global dilemma.
So when you say it's fascinating, what about this is fascinating you? Because is it actually going to be the money spinner for these big groups?
Yes. Ensuring that it is commercially viable and profitable will mean that the capital will flow, to the point of your question. But if we step back from just the profit motive, the policy landscape is what's changing so dramatically, with President Biden starting this year with a climate summit. We just had the G7 meet, the group of 7 nations from the developed world, talking about commitments to formal coal exit policies. And thrown in at the bottom of the White House summary of the G7 statement was a commitment that America will move to 100% carbon-free electricity by 2035.
Produce power without producing carbon pollution and electrifying an increased share of our economy will be the greatest spurring of job creation and economic competitiveness in the 21st century. That's why we're going to achieve a carbon pollution-free electric sector by the year 2035.
Now, carbon-free means not just coal, but also gas. So I'm emphasising that to say the magnitude of policy ambition coming from countries around the world has been staggering. Global finance is very, very good at picking up tipping points and pivoting enormous amounts of capital into solutions once they become commercially viable. And I think Reliance Industries' announcement last week is a reflection that Reliance is joining in with Prime Minister Modi's enormous ambitions for India.
Arijit, just the way Tim said, was this move surprising to you? Because you have been reporting on the group's major strategy shifts. How long has this been in the works?
Morning, Devina. Great to be on the show with you. Well, Mr. Ambani first spoke about new energy in a public forum last year. Now, what did he say? He said that he has a 15-year vision to build Reliance as one of the world's leading new energy and new materials company. He said this at the 2020 AGM last July.
We have a 15-year vision to build Reliance as one of the world's leading new energy and new materials company. It is also an opportunity to make clean and green energy abundantly available at an affordable price to every Indian enterprise, and every Indian utility.
He also hinted that it would be a platform play and a non-traditional play. So that's the first time we had heard these new energy, new material, these phrases from Reliance. But I would say, since when is of lesser importance here than why then? And in that context, I would say the reasons are twofold. Okay, as Tim also said, big oil is facing an existential battle in the face of climate pressure. Did we ever imagine that a tiny hedge fund would have a showdown with ExxonMobil, which would lead to unseating at least 2 board members and force the company's leadership to actually reckon with the risk of failing to adjust its business strategy to match the global efforts to combat global warming? I never thought so, but it happened in June, last month. On the same day in June, activists also scored a big win against another big oil major, Royal Dutch Shell, when a Dutch court ordered the company to drastically deepen its green pledges.
First-time activist investor Engine #1 vaulted into the spotlight back in December when it began pressing ExxonMobil to come up with a better plan to fight global warming amid now scored a historic win, 2 board seats at the oil giant shareholder meeting.
In a landmark climate case, oil giant Shell has been ordered to cut its carbon emissions at a much faster pace. A Dutch court says Shell must reduce its CO2 emissions by 45% by the year 2030.
Now, Ambani also has been thinking on this line for a while. 2020 was the first time he spoke about it publicly, but he's been engaged with universities in US, Europe, R&D centers to finance frontier green technologies. Secondly, and this is the more subtle reason I would say, is to put clean energy into a packed catch-all is perhaps yet another step towards succession planning. Look, Mr. Ambani is 64, and with his own battle with his younger brother Anil for a division of family assets, perhaps would be a reminder that he needs to use Reliance's cost of capital advantage to nurture self-sustaining conglomerates for each of his children to manage. All the businesses are stepped-down subsidiaries. He's getting partners for each one of them. If you do a sum of parts valuation, the O2C piece is valued at 75 billion, Geo is 58 billion, retail is 51 billion of valuation. This is as per HSBC's analysis, but more or less that's the consensus on the street. So create each mini Reliances for long-term succession planning. I also see that as a bigger framework being put in place.
Interesting perspective out there, and especially the data points and how it is not just about a business plan, but also about succession planning. Tim, coming back to you, we were discussing earlier on Biden and the G7 and how there is so much of global focus on clean energy. But this shift to renewables is not easy, right? I know Arijit did mention a lot of big oil players who are looking into this space, but fossil fuel companies have struggled to make the transition to renewables. I mean, if you look at advanced storage technologies and fuel cells are areas that are still in works. I mean, even if you look at the US government policies under Obama, former president, they have pumped into the development of new energy, but the results have been pretty moderate. What are the challenges that you estimate right now in a country like India, where this is still a very, very nascent development?
Davina, that's a really important question, but I would say it's not quite as nascent as you're portraying. India has now deployed over 90 gigawatts of renewables. Half of those have been built in the last 5 years. And we've seen groups like Renew Power and we've seen Adani Green emerge from literally nothing to become world leaders in the space of 5 years. And our projections at IEEFA involve India spending upwards of $500 billion over the next decade if it's to deliver on Prime Minister Modi's ambitions for India to decarbonise and build energy security for all of India.
India's progress in the field of renewable energy is an outcome of our commitment and conviction in fighting climate change. Even when it was not affordable, we invested in renewable energy. Now, our investment and scale is bringing costs down.
It will drive improving balance of trade for India, and it will drive massive investment and employment opportunities. So politically, it's very sensible, but maybe the reason for the magnitude of the speed of Reliance Industries' commitment in June was the reflection of solar project tariffs dropping 18% last year to hit a record low 1.99 rupees a kilowatt hour. And I think to Reliance Industries' credit, they've acknowledged that for India, self-reliant India is more than just a motto of the Prime Minister. It's critical that India ride this investment wave because it's going to involve hundreds of billions of dollars, and there is no reason at all other than ambition for India to not actually benefit from the manufacturing as well as deployment of these new technologies.
Correct. Tim, tell me something. With its deep pockets and attitude for quick results, do you see RIL becoming part of the coterie of global energy giants like NL, Iberdrola, NextEra Energy, Ørsted? Do you see that happening?
Yeah, it's an interesting group of companies you pick. You've just mentioned five.
Because they are, right, the behemoths, right.
But they're also the world leaders. You just named five of the renewable energy world leaders, five of the top five in the world. But I've been watching Ørsted, which used to be the Danish oil and gas company. It changed its name to Dong and then to Ørsted. And now it is the world's leader in offshore wind. Now, that transformation happened in just 5 years. But any billionaire worth their salt would be looking at the share price of Ørsted and said, why would we not want to mirror their strategy? Not mirror, but replicate their strategy in the Indian context and allow India to be the beneficiary of the same investment trends. We saw some hollow words a year ago, as Arijit mentioned. We've seen them investing a lot of time and effort, obviously, in the last 12 months, and we're about to see an enormous amount of capital be deployed if Reliance Industries is to deliver on its commitments.
Right. And pivot, path changing. Arijit, these are the kind of words that we often associate with RIL. I mean, in 2016, you and I know, of course, because we were tracking at that time, how they made a similar kind of massive jump into the telecom space. What is it about this group that makes them the first movers and have this kind of an agility where, let's say, a conglomerate like the Tatas or like the Aditya Birla Group, a more traditional conglomerates, they take their time to make these shifts, if at all?
Oh, so, Devina, I don't think Mr. Mukesh Ambani is a big believer in being first off the block or that so-called first mover advantage. Instead, I would say that he rather waits, see how the industry is evolving, the policy landscape, the technology trends, the capital commitment required, the maturity of the sector in terms of regulations, who are the big players, the business models that are working, and then, design a bespoke strategy which is then backed by this humongous balance sheet and project execution muscle. so in green energy as well. He is not an impulsive person. He's rather a calculated, well thought out, strategist in my mind. It's actually the old playbook.
Right. But again, Arijit, if it is that calculated and there was enough and more evidence that this is one area that RIL was looking into, why weren't the markets happy? The stocks had dipped about 2% on the day of the announcements. Was this call taken again to keep the big foreign investors happy, since their focus is also to go green?
I won't put much, too much of my petrodollars on the market reaction. To me, it was knee-jerk. Look at the big picture. To me, 75,000 crore, $10 billion doesn't appear to be a big capital commitment from a company which has just raised $44 billion during a pandemic. Its balance sheet is $180 billion. It's free of net debt. And, it has spent 90 billion over a past decade. And in several of its greenfield projects like petrochemical expansion, like telecom, like retail. And Mr. Ambani himself said that it has a capacity to catalyze, and I'm quoting him here, another $200 billion of capex over the next 10 years. So obviously, an investor who's used to big returns, dividend, they'll worry, oh my God, will I get the similar returns if he gets so deep down into renewables? Because the ROI, the return on investment, the return on equity, it's very different. The maths is very different from, say, oil and gas, petchem. This is infrastructure. This is a very controlled, with deep government overhang sector. And as I said, the landscape is still evolving. Tim just mentioned huge tariff drops. So will the businesses be sustainable? These are the initial thought bubble that shareholders might have. Once the clarity emerges, once we get the blueprint, the granular details of the blueprint, I'm sure things will stabilize. So don't read too much into that stock reaction on that particular day.
Don't read too much is what my colleague Arijit says. And the pandemic fundraising that he's talking about is, of course, the huge amount of money that Geo Platforms and Reliance Retail garnered over the last 1 year when everybody else was desperate for funding. They managed to get the Facebooks and the Googles to invest in their future projects. Tim, I have been quoting Goldman Sachs quite widely in our conversation, but again, it was reported by Bloomberg that an estimated $11 trillion of renewable investment will be needed in the next 30 years to move completely into renewable energy or green energy. And investors want that. Do you see more such Indian businesses making the shift and investing in this area?
It's a good question, but it also needs to be put in context. So I think the $11 trillion number is probably quite feasible on a 30-year view. But when we look at the International Energy Agency's data, they talk about the world in aggregate spending $2 trillion a year on energy today. Now, we know countries like India, other emerging markets are going to see energy demand potentially increase 50 or 100% in the next 20, 30 years. So we need to actually see a corresponding increase in the investment. And we also know renewable energies are very capital intensive. Once built, they have an almost zero marginal cost of operation. That's the opposite of the existing fossil fuel industry, which needs an upfront investment and then every year has to invest in buying the coal, buying the LNG, buying the oil to run the equipment. And so the ongoing operating costs are very high. So the idea of the world spending $11 trillion on renewables sounds like an enormous number. It is an enormous number, but it's also quite realistic when you put it in the context of the world today spending $2 trillion every year. 2 trillion over 30 years is 60 trillion, and the world needs to decarbonize at a rapid rate of knots. So 11 trillion is as good a dartboard number as any. Will other Indian companies follow? I would say undoubtedly. I think we are seeing a global seismic shift, to quote a word from Larry Fink, the CEO, the founder of BlackRock, and he made those comments in the context of the enormous seismic shift in global markets to embrace the science of climate change and the need for zero emissions industries of the future, exactly as Reliance Industry has now articulated.
As a layman listener who may not know much about the clean energy and the renewable business, one question that comes to mind is, what about the resources? We are talking about advanced energy technologies like lithium, cobalt, nickel. These are not available in large quantities in India for commercial purposes. Fuel hydrogen has significant storage issues as well, and production too. Now, how does a company cross these kind of hurdles?
Yes, I mean, you could do what China's doing. And China 10 years ago did not have access to rare earths or lithium ion. Fast forward to today, and China controls 50, 60, 70, 80% of the world's rare earth supply, mining and processing. Similarly, they have the similar sort of 60, 70, 80% market share of lithium ion processing in the world. But rare earths, despite the name, are not rare. They're just expensive and hard to mine. Does India have a whole lot of it? No, but that's where this is a global challenge and a global opportunity.
Right. Great investment, good return, all that. Arijit, with all that charting out of footprint and draft for Reliance comes in regulatory challenges. Indian businesses have preferred the license route. But this area, with constant changes in technology, regulatory shifts, here it is more pronounced. How tough will it be for an RIL to maneuver this?
Well, these were the same questions that were thrown at Mukesh Ambani when he re-entered telecom, isn't it? So
yes.
Again, same regulatory overhang, policy shifts, and we've seen how that story played out. So yes, we'll have to, wait and watch here, because we just have the outline. We need to see, these 4 buckets or these gigafactories, how that'll plan out, how that'll, the cost structure, whether to what extent Reliance will actually go in for greenfield development of solar or wind projects. What's the detailed blueprint? I don't think people have a full fix on that. Regulatory uncertainty, yes, there is. I'm actually more concerned about the falling tariffs and how that the economics of the sector will pan out and its implication on the returns. Remember one thing, Divina, and that's my parting shot, that Reliance has a huge captive setup already. If it starts to sell, the clean power to its own petrochemical and refining complexes, its own retail stores. Remember, the telecom infrastructure are huge power consumers, right? So if they just sell power to their captive sources, how will that pan out? So Tim will have a better answer as to, how the economics will play out if, Reliance just sells its own power that it generates, the clean power it's planning to generate for its captive sources, whether that could be perhaps a strategy.
So let's think outside the box, as Arijit said. Reliance Industries has made a very ambitious plan. It looks transformational. It looks 100% aligned with the strategies of Prime Minister Modi. And I think from a global perspective, it is brilliant to see. And I'll be watching very, very closely to see how it unfolds.
Devina, sorry to butt in. Also remember, as Tim said, the timing, global geopolitics after Paris, what President Biden is talking about. Wall Street, money bags are saying, go green, else we sell your stock or we won't invest. And in India, the great PLI push, or the whole self-reliant push of local manufacturing. So it's the perfect time, according to me, to have this kind of a massive foray into, clean energy.
Right. Important point. And clean and green energy seems to be the mantra for all of us. Thank you so much, Tim and Arijit. Thank you again for joining us.
Absolutely. Really appreciate being on. Thank you very much.
Thank you.
Thank you, Tim and Arijit, for explaining how RIL, in its new avatar, aims to get a front row seat amongst energy behemoths who have realized that to retain their power, the cradle built on fossil fuel needs to shift. I'm Devina Sengupta and you've been listening to The Morning Brief. This episode was edited and coordinated by Shashwat Mohanty. I hope you enjoyed listening to the episode. Do send in your feedback to themorningbrief@timesgroup.com and share the episode on your social media networks. The Morning Brief airs every Tuesday, Thursday, and Friday. Thank you for listening and have a nice day ahead. All clips used in this podcast belong to their respective owners. You can find the credits in the description.